Oracle just reported one of its strongest quarters in years, and the stock surged after the results, as investors reacted to the company's rapidly accelerating AI and cloud business. Management made it clear during the earnings call that they believe the current wave of demand for artificial intelligence infrastructure could support strong growth at least through fiscal 2027. However, there is also an important debate emerging around Oracle's strategy. The company is aggressively expanding its data center capacity and raising tens of billions of dollars to help finance that expansion. The key question for investors is whether this massive build-out will translate into sustainable, long-term revenue and profits, or whether it introduces meaningful financial risk if AI demand eventually slows. Let's go through the key highlights from the quarter. Oracle reported a very strong third quarter for fiscal year 2026. Organic total revenue growth exceeded 20% year-over-year, and organic non-GAAP earnings per share also grew above 20%. According to management, this is the first time both metrics have crossed that threshold since 2009. The company emphasized that its business model is increasingly driven by predictable, recurring cloud revenue, rather than the more cyclical, license-driven model that defined Oracle in the past. Cloud applications continued to deliver steady growth. Cloud applications revenue increased about 11% in constant currency and reached an annualized run rate of roughly $16.1 billion. Within that segment, Fusion ERP revenue grew around 14% year-over-year. Fusion Supply Chain Management and Fusion Human Capital Management both grew about 15%, while Fusion Customer Experience increased 6%. NetSuite revenue also rose roughly 11% during the quarter. Industry-specific SaaS solutions performed even better, growing about 19% in constant currency across verticals such as hospitality, construction, retail, banking, telecommunications, and the public sector. Another positive signal for future growth was deferred cloud applications revenue, which increased 14% in constant currency. This was faster than the 11% growth recognized in the quarter, suggesting continued momentum and demand for Oracle's software services. The most dramatic acceleration, however, came from Oracle's infrastructure and AI segments. Multi-cloud database revenue surged more than 500% year-over-year. This growth is being driven by Oracle's strategy of making its database services available inside other major cloud platforms, including Microsoft Azure, Google Cloud, and Amazon Web Services. During the quarter, Oracle reached global regional coverage across these partner ecosystems, significantly expanding its addressable market. AI infrastructure revenue also grew extremely rapidly, increasing more than 200% year-over-year. Management said demand for AI computing capacity currently exceeds supply, highlighting the strength of enterprise spending on artificial intelligence workloads. Oracle also reported remaining performance obligations of approximately $553 billion. This figure represents contracted future revenue that has not yet been recognized, and management indicated that the majority of the increase was driven by large, AI-related infrastructure deals. In addition, the company signed more than $29 billion in contracts under new commercial models, including bring-your-own hardware arrangements and upfront customer payments. These structures allow Oracle to expand infrastructure capacity while sharing capital requirements with customers. To support this rapid expansion, Oracle announced a major financing initiative. The company plans to raise up to $50 billion in debt and equity funding, and it has already secured about $30 billion through investment-grade bonds and mandatory convertible preferred stock. Demand for this financing was reportedly very strong. Oracle is also investing heavily in data center capacity and power generation. Management said the company has secured more than 10 gigawatts of future data center and energy capacity, with more than 90% funded through partnerships. This approach is intended to reduce the amount of direct cash investment required from Oracle itself. Operationally, the company has been scaling manufacturing and deployment capabilities. Oracle tripled the number of infrastructure manufacturing sites and increased rack output fourfold, helping reduce the time between installing equipment and recognizing revenue from that capacity. Another notable development this quarter was Oracle's acquisition of a 15% equity stake in the newly independent TikTok US, along with a board seat. Oracle will account for this investment using the equity method, meaning its share of TikTok US earnings or losses will appear as non-operating income in future financial results, starting in fiscal Q4. Beyond the financial metrics, management spent considerable time discussing how artificial intelligence is being embedded directly into Oracle's enterprise software. The company has already deployed more than 1,000 AI agents across its applications and industry platforms, automating workflows in areas such as finance, supply chain, healthcare, and banking. Oracle also introduced AI Agent Studio, a development environment that allows customers and partners to build custom AI agents using models available in Oracle Cloud. The company believes this deep integration of data, applications, and AI infrastructure gives it a competitive advantage in the enterprise technology market. Management also highlighted competitive wins against other enterprise software providers, including migrations from Workday and SAP in sectors like healthcare, financial services, government, and manufacturing. Oracle reported more than 2,000 customer go-lives during the quarter, with deployment times continuing to decline as adoption accelerates. From a profitability standpoint, Oracle said its AI infrastructure operations are already generating solid margins. Gross margin on AI capacity delivered in the quarter was about 32%, above the company's own guidance, while higher-margin database services continue to support overall cloud profitability. Still, despite the strong momentum, the broader investment story now centers on execution risk. Oracle is making a massive long-term bet on the growth of artificial intelligence computing demand. While many of its infrastructure investments are supported by customer contracts or partner funding, the company is still taking on significant financial commitments to expand capacity at scale. If enterprise AI spending continues to grow rapidly, this strategy could transform Oracle into one of the key platforms powering the global AI economy. But if demand slows, or if utilization of new data center capacity falls short of expectations, the scale of these investments could become a meaningful challenge. So the real takeaway from this quarter is not just strong earnings growth. It is Oracle positioning itself for a major structural shift, moving from a traditional enterprise software provider toward becoming a core infrastructure player in the AI era. Thank you for watching. If you found this analysis useful, feel free to subscribe or follow for more market breakdowns like this. See you in the next one.